supply and demand at least closer together than they are, and that would give us a chance to have get inflation down, get wages down, and then get inflation down without having to slow the economy and have a recession.
Chris, why you love Coinbase?
Unemployment rise material.
I hate Coinbase.
Now, I would say I think we have a
They
good
put a laughing face.
to have a soft or softish landing or outcome. If
We
you
love
want.
it.
I'll give you a couple of reasons.
We
for
love
that.
it because it's
One
going
is
away.
households and businesses are in very strong financial shape. You're looking at excess savings on balance sheets, excess in the sense that they're substantially larger than the prior trend. Businesses are in good financial shape. The labor market is, as I mentioned, very, very
Pablo
strong.
said, sorry, I forgot your daughter's passing
So
the info to you.
it doesn't seem to be anywhere close to a downturn.
I'm Marianne
Therefore,
said about
the
XRP,
economy is
please.
strong and is well positioned to handle tighter monetary policy.
I mean,
So,
XRP is in
we
its
expect
same
that this
position.
will be
It's
challenging.
going to
It's
hold.
not gonna be easy, and it may well.
It's not going to move until after the lawsuit,
Under our
which is
control.
about 4 months.
Our job is to use our tools to
Damn.
try to achieve that outcome, and that's what we're going to do.
So why doesn't everyone just
Steve Leishman,
dump
CNBC, thanks for taking my question, Mr.
XRP
Chairman.
until after the
You
case
talked
and
about
then
using
pump it?
50 basis points.
'Cause we don't know when the case is gonna end.
Coming
Sure.
meetings. Might there be something larger than 50? Is 75 or a percentage point possible? And perhaps you could walk us through your calibration. Why 1 month or one meeting should we expect at 50? Why something bigger? Why something smaller?
Sorry,
What
Pablo.
is the reasoning for the level of the amount of tightening? Thank you.
Sure. So 75 basis point increase is not something the committee is actively considering. What we are doing is we raised 50 basis points today, and we've said that, again, assuming that economic and financial
Is
conditions
that the Fed meeting?
in ways that are consistent with our expectations, there's a broad sense on the committee that additional 50 basis point increases should be on the table for the next couple of meetings. So we're going to make those decisions at the meetings, of course, and we'll be paying close attention to the incoming data and the evolving outlook, as well as to financial conditions. And finally, of course, we will be communicating to the public about what our expectations will be as they evolve. So the test is really
You're on the
just,
air.
as I laid it
You
out,
hot?
economic and financial conditions evolving broadly in line with
Are you?
expectations. And, I think expectations are.
You was kind
We'll,
of
we'll start to see inflation, flattening out, not necessarily declining yet, but we'll see more evidence. We've seen some evidence that the core PCE inflation is perhaps either reaching a peak or flattening out. We'll want to know more than just some evidence. We want to really feel.
What do you think about
like we're making
Quant?
some progress.
Is it a good investment?
But
Always.
we're going to make these decisions and
Top
there'll be a
5
lot more
coin.
information. I just think we want to see that information as we get there. It's a very difficult environment to try to give forward guidance 60, 90 days in advance. There are just so many things that can happen in the economy and around the world. So we're leaving ourselves room to look at the data and make a decision as we get there.
I'm sorry, but if inflation is lower 1 month and the unemployment rate higher, would that be something that we would calibrate towards a lower increase in the funds rate, or?
I don't think
if
a
those
1
are-
month. 1 month is not no. A 1 month's reading doesn't tell us much. We'd want to see evidence that inflation is moving in a direction that gives us more comfort. As I said, we've got 2 months now where core inflation is a little lower, but we're not looking at that as a reason to take some comfort. I think we need to really see that.
Look
our
at DAR,
expectations being
please.
fulfilled, that inflation is
DAR.
under control and starting to come.
So go to CoinMarketCap.
Excellent 5-year hold for life-changing
It's not that we
money.
would stop, we would just go back to 25
That's
basis
Quant.
point
That's what he
increases.
said.
Yes.
It'll be a judgment call when these.
That is
moves
correct.
come out. But again, our expectation is if we see what we expect to see, then we would have 50 basis point increases on the table at the next 2 meetings.
What am I going to?
CoinMarketCap.
Thank you. Colby Smith from the Financial Times. Given the expectation that inflation will remain well above the Fed's target at year end, what constitutes a neutral policy setting in terms of the Fed funds rate? And to what extent is it appropriate for policy to move beyond that level at some point this year?
So, neutral. When we talk about the neutral rate, we're really talking about the rate that neither pushes economic activity higher nor slows it
Mine's
down.
up
So it's a
for a while.
concept really It's not something we can identify with any.
It's a video game.
So
Pull
we
it up.
estimate
Pull up its website.
within broad bands of uncertainty. And the current estimates on the committee are sort of 2 to 3%. And also, that's a longer run estimate. That's an estimate for an economy that's at full employment and 2% inflation. So really,
Chromium.
really what we're doing
Chromia
is
ecosystem.
we're raising rates expeditiously to what we see as the broad range of
And Mocha
plausible
Brilliant's
levels
portfolio.
of
I like
neutral.
looking at what they
But
tag.
we know that there's not a bright
That's
line
some
drawn on the
futuristic
road that
tag
tells
right
us
there.
when we get there. So we're going to be looking at financial
Yeah.
conditions, right? Our policy affects financial conditions, and financial conditions affect the economy. So we're going to be looking at the effect of our policy
Max
measures on
supply,
financial conditions.
800
Are they tightening
million.
appropriately? And then we're going to be looking at the effects on the economy. And we're going to be making a judgment about whether we've done enough to get us on a path to restore price stability. It's that. So if that path happens to evolve levels that are higher than estimates of neutral, then we will not hesitate to go to those levels. We won't. But again, there's a sort of false precision in the discussion that we as policymakers don't really feel. You know, you're going to raise rates and you're going to be kind of inquiring how that is affecting the economy through financial conditions. And of course, if higher rates are required, then we won't hesitate to deliver them.
We talked about DAR when it was 0.8. Where do you think it can end up short term?
Do you see evidence that
Point dog.
inflationary
Because
psychology
right now
is
that's
changing, that
1
in
point.
areas like workers' wage demands, businesses'
1.5.
willingness to raise prices?
It's up 5%
Do you see
today.
evidence that there is a psychological shift going on?
We will take we will review it in an hour.
We don't really see strong evidence of that yet, but that does not in any way make us comfortable. I think if you look at short-term inflation expectations, they're quite elevated.
Pablo
And
responded
you
to
look at that and say,
Pablo
well, that's
saying,
because
just
people
load up
expect
whatever you
inflation
can
to come
afford.
down. And in fact,
Won't be
inflation
any
expectations
quant
come
left
down
shortly.
fairly sharply.
Sound?
Longer-term inflation expectations have been reasonably stable, but have moved up but only to levels where they were in 2014 by some measures. So
Maybe we said
you
about
can look
that.
at that, and I
Go to
think
Are you
Twitter.
streaming your
that's a fair
Screen?
description of the picture.
Hmm?
But
Go to Twitter.
it's really about the risks. We don't see a wage price spiral. We see that companies have the ability to raise prices, and they're
Here's
doing
the-
that, but there have been price shocks. So I just think
That's tight.
it takes you back to
Okay, guys, we have a gem coming
we
up.
need to
We're going to cover it in 1 hour.
our policy rate up to ranges of more normal, neutral levels, and we need to look around and keep going if we don't see that financial conditions have tightened adequately, or that the economy is behaving in ways that suggest that we're not where we need to be. So you don't see those things yet, but I would say there's no basis for feeling comfortable about that. It's a risk that we simply can't run that risk. We can't allow a wage price spiral to happen, and we can't allow inflation expectations to become unanchored. It's just something that we can't allow to happen, and so we'll look at it that way.
Dave.
Great, thanks, Chair Cobb.
Dave George
Gina Smith,
Chat.
The New York Times. You mentioned in the statement
What
that
up, Dave?
the upside risks to inflation from Russia and China. Obviously, those are very much supply shocks rather than demand side. And I wonder what you meant
That's
to
you, huh?
convey by
You got
adding
trapped.
them.
Thanos.
I wonder what you meant to convey by adding those.
Well, so we
Crypto toe, easy.
our tools don't really work on supply shocks. Our tools
Dave
work on
Dar out on Discord at $1. Good money
to an
earned
extent
for the
we
people.
can't affect really oil prices
Hit
or
2.2.
commodity prices or food prices and things like that. So we can't affect those. But there's a job to do on demand, and that you can see that in the labor market where demand is substantially in excess of supply of workers, and you can see it in the product markets as well. But I guess I'm just pointing out that a couple of things. For both the situation in Ukraine and the situation in China, they're likely to both add to headline inflation, and people are going to be suffering from that. You know, people almost suffer more from food and energy shocks but even though they don't actually tell us much about the
My
future
ticker
path.
is
So
Deer Hunter on
the second thing
Discord.
is that they're both capable of
What's his name
preventing
on there?
further progress
Pablos.
in supply
Deer Hunter, what up, brother?
supply chains healing, and so or even making supply chains temporarily worse. So that they're going to weigh on the process of global supply chain healing, which is going to affect broader inflation too. So in a way they're two further negative shocks that have hit really in the last 60 days, 90 days.
Hi, Victoria Guida from Politico. I want to follow up on that because you all have obviously highlighted that there are both supply and demand issues at play in inflation. And I'm just wondering, if these supply chain issues continue because of Russia, because of China, or just because these things take a while to work out, does getting back down to your 2% mandate require that these supply chain issues get resolved since you can only handle the demand side, as you said, or will you have to crimp demand maybe even further if the supply chain issues don't resolve themselves in order to try and get inflation back down to where you want it to be?
So, I'll just say for now, we're focused on doing the job we need to do on demand, and there's plenty to be done there. Again, if you look at it, it's essentially almost 2 to 1 job vacancies to unemployed people. There's a lot of excess demand. There are more than 5 million more employed plus job openings than there are the size of the labor force. So there's an imbalance there that we have to do our work on. It's a very difficult situation if you can't, you would look at core inflation, which wouldn't include the commodity price shocks, and that's one of the reasons we would tend to focus on that, because we can have more of an effect on that. But it would be a very difficult situation. We have to be sure that inflation expectations remain anchored, and that's part of our job too. So we'd be watching that carefully, and it puts any central bank in a very difficult situation.
Howard Schneider with Reuters, and thanks, and nice to be back. So two questions, one quick one. You cited the 1.9 to 1 figure so often now. I got to ask you, what would be a good figure there? What would you like to see that come down to? Do you think that you're at sort of a non-inflationary vacancy to unemployed rate? And secondly, on help from inflation, how much are you counting on wealth effects through stock market channels, equity markets broadly down quite a bit?
What's going on, guys? Are you catching the Fed?
How are you mapping that into household consumption? Have they come down enough? Do you need another leg down in equity values to think that households are going to stop spending at the rate you need them to stop spending?
Okay, so in terms of the vacancies to unemployment ratio, we don't have a goal in mind. There's no specific number that we're saying we've got to get to that.
If you didn't catch it,
really
it's live on
get to
Twitter
a
right
place
now.
where
Link in
the
bio.
labor market appears to be more in balance, and that depends not only on
VC
the level
Crypto
of this,
Nation.
also it depends on how well the matching function in the labor markets are working. Because the longer these expansions go on, you can get very efficient with all of that, and the beverage curve shifts out, and that also tends to help. So there isn't a specific number. I will say we were, I think when we got to 1 to 1 in the late teens, we thought that was a pretty good number. But again, we're not shooting for any particular number. What we'd like to see is progress, but we're not really looking at that. That's an intermediate variable. We're looking at wages, and we're looking at ultimately inflation. So that there are a bunch of channels through which policy works. You can think of it as interest-sensitive spending. And then you can think of another big one as asset values broadly, and there are big models with a lot of different channels that are related to that. We don't focus on any one market, the equity market or the housing market, or we focus on financial conditions broadly. So we wouldn't be targeting any one market, as you suggest, for going up or down, or taking a view on whether it's at a good level or a bad level. We just would be looking at very broad measures of financial.
They're just looking at raw information.
Indexes, for example, which include.
All right, so guys, let's take a broad look at this and kind of like put it to where we need to put it. Right? At the end of the day, it's a 0.5 move, right? So when you're looking at this, I'm listening to repeat conversations. I'm listening to comments that are coming back that are all the same. And really what it comes down to is that the Federal Reserve doesn't have a plan to really mandate any type of numbers to where you can look at something and say the unemployment rate is up, so they're going to raise the interest rates. The housing market is up, so they're going to raise the interest rates. The housing market is down, so they're going to lower. There's simply their entire focus every single time that I've seen it. He keeps responding to a very simple thing, which is they're going to go by the income in the households and whether or not the bank accounts have money. So they're focusing in on the money that people have in their bank accounts and what they're bringing into their house, and that is how they're going to bill you. So think of the Federal Reserve as a tax. And the better the Americans do, the better that America does across the board. They will raise the 0.5 per intervolt until they get a hold of this inflation to stop it from happening. Now, the real course is, yes, they do have to focus on getting the rest of the employment corrected, meaning they want more people to go to work so that there's more money in their bank accounts and more money per household so that they can bump up the inflation number. And that's really the only thing he said. Everything else, they don't really care. They're focusing on that moment. So that's what you guys can take from the Federal Reserve and realize that it's still bullish because it's only 0.5. It's not a 0.2. It's not a 0.3. It's a 0.5 every couple months. And you can, with cryptocurrency and the ability to invest and run these pumps and these advancements in the adoption and the volatility of the market, it's going to keep you into a good zone. We're not in a bad situation. You got to realize 2008, everybody was working and then they lost their jobs. Now, everyone's been out of work for a year and a half and inflation is here, but nobody cares. There are 2 times more jobs available than there are workers because they're making more money doing other things. They're not even going back to work. So this is an entire different situation. So even if the inflation went even higher, you would just have to lower your Starbucks from 5 cups a week to 2 and get over it. You don't need a $12 latte. America is it's fat, overpriced, and this is just a reality shock that the rest of the world doesn't have 5-bedroom houses, air conditioned everywhere, a $500 electric bill, $2,000 mortgages. You're just going to have to understand that in America we have an abundance and now we're just getting trim the fat, and that is all. So you can take this information as a bullish moment. Thanks for joining, guys. Appreciate you guys coming in, and that's where we're at. And don't forget to hit the like, the follow, and we got some really good coins coming up because we will be doing full reviews. And keep in mind, there is a coin, the Venture Capitalist coin. This is simply a coin that is based on a bunch of people working together, putting in a crowdfunding coin. This coin right here just came out. It was fully tested, and now they bottomed it out to where it can start. So this project is just starting off. It is where people are putting their coins in, and by being part of this, the roadmap is going to come out where you will get airdrops and things like that in crypto and information that you need to grow. And I think the level is 100 VC coins. So pick up your VC coins before everyone starts picking them up, so that way you can get inside of the information. Appreciate you guys.